Ladies and gentlemen, good day, and welcome to S. Chand and Company Limited earnings conference call hosted by Prabhudas Lilladher Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jinesh Joshi from Prabhudas Lilladher. Thank you, and over to you, Mr. Joshi.
Thank you so much. Good day, everyone. On behalf of Prabhudas Lilladher, I welcome you all to the 1Q FY23 earnings call of S. Chand Limited. We have with us the management represented by Mr. Himanshu Gupta, MD, Mr. Saurabh Mittal, CFO, and Mr. Atul Soni, who heads the Investor Relations Department. I would now like to hand over the call to the management for opening remarks, and then we can open the floor for Q&A. Thank you, and over to you, Himanshu ji.
Thank you so much. Good afternoon, ladies and gentlemen. I am Himanshu Gupta, the Managing Director of S. Chand Company Limited. I would like to welcome you all to our first quarter results conference for FY22, and thank you all for taking the time out and joining us here today. I'm extremely happy to share that Q1 FY23 has been a record quarter for S. Chand in its history. We hit the following landmarks during this quarter: highest ever quarter one sales, highest ever quarter one EBITDA, first time PAT profitable in Q1, lowest receivable days in quarter one in the past 5 years, lowest net working capital days in quarter one in the past 5 years, lowest net debt level since March 2018, and 6x increase in OCF over Q1 last year. Saurabh will touch more about these in his comments. As we have now firmly entered FY23, we see that hybrid or blended learning is the way ahead. We benefited in Q1 from schools and colleges having reopened for classes in physical mode with new vigor and witnessing increased admissions. A lot of schools in small cities which had challenges of online learning due to the lack of infrastructure are seeing students back at school, which is spurring demand for books and stationery. Some of the schools which had closed during the COVID-19 pandemic have reopened. Further, this has also improved the cash flow cycle of the schools, channel partners and distributors, which was severely disrupted for the past couple of years. This is reflected in the quicker realization from the channel during Q4 FY22 and Q1 FY23. The publishing business has had a couple of years of disruption, which had impacted a lot of small and medium-sized content providers. In the post-COVID world of supply chain disruptions, raw material shortages, we are well placed to capitalize on our premium product range, brand, distribution network, relationships with educational institutions, and customer service, along with the financial strength of the organization. I would like to highlight that this opens up an opportunity for us to increase market share, and we are working tirelessly for this. On the EdTech front, our recently launched S. Chand Academy on YouTube has had phenomenal success in a short period of time. We have launched over 550 videos in higher education, science, engineering, and test preparation on this channel so far, and the channel has notched up over 4 million views. This further enables the promotion of our print content, further spurring demand in that segment with the blended learning offering. This channel enables students to learn critical areas through top-notch educationists, which may not be available in Tier 2 and Tier 3 colleges. We expect S. Chand Academy to ramp up significantly and reach over 1,000 videos and 10 million views over the next few months. Test Coach, our test prep and higher education app, is seeing strong traction to cover over 100 plus government vacancy tests, which is a huge market. We expect increase in the government vacancies post-COVID and with the elections due in 2024, which would further spur demand. Madhuban Educate 360, our K-12 learning management system, is now being implemented in over 55 schools and covers 100,000 students. Our personal learning app, Nursery, has over 330,000 downloads. On the investment front, we have made our first profitable exit from the sale of our stake in textbook for approximately 180 million in July. This translates into a 7.8x return over our initial investment. We continue to partner with Textbook on smart books. Now the big elephant in the room is the education policy, the NCF, after the new education policy, which was announced in 2020 and its pending implementation. We are hopeful that the new National Curriculum Framework, or NCF, would be launched later this year, after which NCERT and SCERT would create content for the K-8 segment. To be on the conservative side, at the start of the year, our current guidance does not include any impact of NCF announcement. Our target would be revised upward if we get a timely announcement of the NCF. On the higher education front, some of the states have already implemented the NEP, where we see strong traction for our content. National Testing Agency has already launched CUET, which will become one of the most important examinations for college admissions apart from IIT JEE and NEET. With that, I will now request our CFO, Mr. Saurabh Mittal, to apprise us all on the financial performance of S-Chan. Thank you.
Good afternoon, everyone, and thank you for your time. I am Saurabh Mittal, CFO of S-Chan. In terms of numbers for the quarter, our consolidated operating revenues came at 1,073 million versus 358 million during the same time last year, registering a growth of almost 3 times the revenue versus the quarter last year. We maintained our gross margins at the same levels as last year in spite of a sharp increase in paper prices as realizations improved and inventory got liquidated. We reported EBITDA profits of 262 million versus a loss of 169 million in the corresponding period last year, in spite of undertaking salary hikes, higher travel spends during the quarter, spurred by higher volumes. Happy to share that this quarter was the first ever profitable Q1 in company's history, with a profit of 62 million versus a net loss of 314 million in the same period last year. I would also like to bring your attention to slide number 5 to slide number 8, which showcases the results of the steps taken during the past 3 years towards building a cost-effective and lower working capital organization with focus on positive cash flows. We continue to focus on working capital rationalization and product rationalization for the coming year. Trade receivables reduced to 2,109 million during the first quarter versus 2,485 million during Q1 FY22. This is a 376 million decrease in receivables in spite of achieving incremental sales of 715 million over quarter 1 last year. In terms of receivable days, it stood at 139 days versus 233 days, a reduction of 94 days over the previous year. This is the lowest receivable days in Q1 in the past 5 years. Inventory reduced to 1,352 million versus 1,480 million. This improvement in inventory is driven by various steps that we took in controlling print runs and optimizing book titles. This inventory level includes raw material paper inventory of 301 million versus 234 million in the previous period, which is being built earlier this season due to the sharp increase in paper prices. In terms of inventory days, it stood at 202 days versus 295 days, a reduction of 93 days over the previous year. Net working capital reduced to 162 days versus 282 days, which is a reduction of 120 days over the previous year. This is the lowest net working capital in Q1 in the past 5 years. We reported net debt of 279 million versus 1297 million of the previous period, and gross debt of 1145 million versus 1862 million in the previous period. Net debt has reduced by 1,018 million on year-on-year basis. This is the lowest net debt level since March 2018. In terms of cash flows, our strategy of focusing on cash flows that has yielded results where we have seen OCF jump 6.5 times over the same period last year. We ended the quarter with OCF of 633 million in the current quarter versus 99 million in the same period last year. As we continue in FY23, I would like to reiterate for this year. Firstly, we will be taking price hike across our product portfolio upward of 15% to mitigate increased paper prices. Secondly, we reiterate that we are looking to do annual revenues of 600 crores, which translates into a 25% growth for the year. Thirdly, unprecedented hike in paper prices may put pressure on our gross margins to the tune of 100 to 200 bps. We are looking to counter paper prices through our price hike, improved realizations, internal efficiencies, and continuing cost control throughout the year. Fourthly, on the debt front, we are well on our way to become net debt free by the end of this year and further optimize working capital going ahead. Fifth, the biggest growth driver for our print business could come from the introduction of new syllabus post the announcement of the NCF. This should lead to a strong revenue and profitability growth for 2-3 year period. We have not included the impact of NCF in our current revenue guidance, but needless to say, if that comes through, it can greatly change the FY23 financials as well. And with this, I would like to open the call for questions. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Jiten Parmar from Aurum Capital. Please go ahead.
Yeah, good afternoon, Eschan management team, Himanshu ji. Really happy to see that Q1 was the best Q1 in history. So congratulations for that. My questions are primarily on basically in the sense that since the paper prices have been on a continuous hike, do you expect, and what I've heard from the industry sources is that, paper is not available on credit. Do you think that could stretch our working capital needs, or and how is this something which can benefit our company, because maybe unorganized players might not have, might not be able to basically procure on without credit. So can you throw some light on it?
Yeah, hi. So I'll take this one. Thank you, and for the appreciation of our Q1. See, paper prices, yes, we all agree that the prices are increasing on a weekly, monthly basis, and that's a cause for concern for us. However, we've got 2-3 things. In terms of working capital, yes, it may stretch it a bit, but as you've seen, we are very well placed at the moment with our finances, and our realizations, our recovery from the market will also improve. Because of this, we are able to put pressure on our channel partners to pay us early, order early, and we have in fact placed paper orders earlier this year. So no challenges on availability of paper for us at least, which may be a problem for the others. Working capital may get stretched, but it will be a temporary phenomenon since most of our long-term obligations have been taken care of. So this I don't think would become a challenge for us at all. We are well prepared for that.
So we have procured paper, I think, covered most of our requirements for this year. We have ordered or secured paper around 80-85% of our current year requirement, and rest 15-20% we'll be also securing very soon. So we don't see any problem in the availability front. Yes, the price is increasing. I'm hearing from the market the price might stabilize by maybe October or November, hopefully. But yes, it's a creating problem for the unorganized player as he is facing difficulty, as the last 2 years was also financially tough for him, and now paper prices increasing is creating a bigger battle for him. So I think it might be a little bit better in terms of improving our market share in the market, with being an organized player and having better financial strength than before, and being able to procure paper on time. That will definitely help us in increasing our market share this year, I feel.
Yeah. So paper is how much of our input cost from a percentage point of view?
It's around 18-20% normally in a normal year. This year it might increase to maybe 24-25%, depending on the final outcome. But yes, it's 18-20% normally.
We are estimating a maximum of 200 bits on the gross margins. Although, I mean, the bottom line may get, and the EBITDA and all will not get impacted, because we're feeling that we probably get higher volumes this year. So overall, while gross margins might contract 100 bits, 200 bits, EBITDA targets and profits may be well in line, because we feel volumes will be much higher this year.
Okay. So I also want to congratulate you on basically one notification which you had sent to BSE regarding exit from test book, which happened last month. So congratulations on that. It's a very good outcome. What I want to know is, is this something, investments into AgTech or other companies, will it continue, and what would be the, how much of it, how much of the cash flow we are allocating towards that, and how do investors make sure that, this is not a it's not unnecessary diversification. So can you throw some light on that, please?
Yes, so if you look at, in fact, our presentation also talks about our philosophy. One clarification that textbook exit accounting will probably happen in will happen in quarter two. It's not been accounted for in quarter one, so that will happen in quarter two because the exit has happened only in July. So the current numbers, Q1 numbers, do not include that profit of about 50 odd crores. We will continue to invest at a maximum of 6 to 8 crores in where we really feel there is a strong traction. And it's not that we have to do an investment every year. We will do it as and when we find something which is very compelling. We will take our time and invest over a period of time. Last year we did iNeuron. We started the process in March 21. We ended it in December 21 because we wanted to ensure that we are investing into people who have a great idea and want to build a sustainable and profitable business, and those who are making a difference. And actually, there is an impact of the kind of work that they are doing, and that is what we found with both with iNeuron and with Smartivity. Yes, as and when there is an opportunity to exit, we will definitely exit because we are treating both this as a strategic and financial investment. So since we have a responsibility to our shareholders, we'll continue to take exit as and when there is an opportunity.
So will this be, my question is basically in that will there be adjacencies to our existing business, and will it be related where, it could be a win-win situation for both of you guys, or could it be something unrelated also?
It can be both. There are some places where we are actually strategically helping them also generate revenues also. So that's one strategic part that we are doing. And as and when there is an exit opportunity, we would look at that full, partial. See, we've got all options open. Whatever works at that point of time. Textbook, we saw an opportunity. They were merging with a larger, very large edtech player. And we were eventually going to get a very insignificant part of that player. So then we decided we would not want to be a very insignificant investor in a large entity. So we decided to take an exit. But we continue to work with Textbook, with our smart books. So that relationship still continues.
Jiten, just to add, we would never be investing in a unrelated sector. I think that was your initial drift there.
Yes.
So we would only be investing in education sector.
Okay, great. And
in areas where we feel, and in areas I was just saying that where we feel that our company doesn't have the DNA or the management bandwidth to make that product or make that service for the customer, and we believe that it's a good investment opportunity where the valuation is also decent and the company is also reaching a path to profitability. Those companies will be looked to invest, not like companies which have a very high cash burn. Those companies we are not very interested to invest in.
Great. Thank you for clarifying on all this. So, do we expect to be debt free this year? And second is, what is the margin guidance for the total year?
Yeah, so if you look at debt right now, if you saw June end, we were 27 crores, and with this 18 crores coming in, we are down to about 9 probably already, single digit. So seeing debt free at the end of the year is almost certain. Of course, unless something happens on the COVID front or something. But Other things remaining the same, we'll definitely be debt-free by the end of this year. So that's not even an area of concern.
Margin.
In terms of margins, gross margins may get impacted by 100 to 100 bits that we've already given a guidance, but I don't see impact on EBITDA because volumes will be higher. And operating leverage will kick in because our fixed costs are not moving that much. Our revenues will definitely move higher.
Great. Thank you so much for answering my questions. Best of luck to you. If I have any further questions, I'll get back into you. Thank you so much.
Thanks, Jiten. Thank you.
Thank you.
Thank you. Next question is from the line of Devrash Vakil from HDFC Securities. Please go ahead.
Yeah, great set of numbers. Congratulations to the management and the team. I have a question regarding NCF. So we keep reading about it. There are interministerial meeting also scheduled. So how confident we are compared to what we had in the last call that we will get NCF by the end of this year, and will that help us to come out with our content by March?
So we cannot be 100% sure that the NCF will come out this year or not, but if it comes out at the timing which it comes out early, then it will help us to grow the business more. But if it comes out late, then it will be not implemented fully next year. So it depends on the timing that the government announces. But we feel, and from our sources, that the government might announce this year. But again, depends on the government. So we cannot be 100% sure that NCF will come out or not come out. Difficult to say. But we are, in any case, feeling that the first quarter has been good and the momentum has been good and the market is opening up. So in any case, without the NCF also, we are predicting healthy growth. And if NCF comes in, it will only boost up the growth.
Right. So it is a government-driven policy, and as such, we cannot be 100% sure in the government. So my question is from, say, suppose government needs to do, say, 10 steps before they come out with the NCF. Say at the end of the March, they were maybe at stage number 4 or 5, and now have we seen the progress that they are now at a stage of 7 or 8, so we can be fairly confident that by December we can be coming out with. So I just wanted to know from your perspective and your sources, have they moved substantially from, say, March to now?
They don't share the sources, they don't share the steps with us, with the private companies. And but yes, definitely we feel that government is moving it up, and hopefully we are feeling that by this calendar year end, or maybe a little bit earlier than November, December, they should announce the NCF. That's what we are hearing. But again, it's a matter of with the hands of the government. Whatever happens will come to us later on.
So actually, they have also set up state committees, and they have been in regular consultation with various committees across the country, and we keep on seeing a lot of announcements from all the state governments and the state education ministers about the steps that they are taking for this new announcement. So that gives us a feel that the government is serious and they are taking all the necessary steps. Now, as you can understand from a government thing, they might even have the report in their hands, or when they want to release it, it's their decision, right? So that's something which is out of our hand, but we can definitely see the steps which state governments as well as the national government is taking for announcement of NCF.
Right. Thank you. I'll get back to you.
Thank you. The next question is from the line of Nitin Dharmawat from Aurum Capital. Please go ahead.
Okay. Thank you for the opportunity. Am I audible?
Yes.
Yes, sir, you are.
Okay. So a couple of questions. First question is, how many subsidiaries do we have now, and what is the plan to consolidate these numbers? Because some of this came in form of acquisitions as well, or some of this we would have created to enter into new areas.
Yeah, so we have about 12, and we are in the process of already merging 3 the applications. We've done one consolidation last year. 3 of them are under process pending with the NCLT. long-term vision, I think we should be down to 4 entities by the end of next year. By the end of FY24 is what I'm anticipating. We don't want many entities, and to ensure that we are tightly knit and reduce regulatory compliance issues and all that. So by end of FY24, I'm assuming we'll be down to 3, 4 or maximum 5.
Okay. And my second question is related to the returns which happens on the market of the books which are sold. So what is the percentage, in terms of percentage of the revenue, what is the percentage of the return which comes back from the market, and what is the target that we are having compared to the last year?
Yeah, traditionally during COVID, last 2 years were very high. I mean, we had gone up to almost 30% at times. But this year we've been very strict. We've given prior intimation that we will not be accepting anything above 15%, and that is what we are doing at the moment. Considering the kind of collections that we've had in the first quarter and even in July, that the way things are moving, it seems it will be well within that, and going forward we will further try to reduce it to 12 and then maybe 10% in the next year. So we are very, very clear that we do not want to, we will not accept, and if somebody needs to take supplies, they have to keep that in mind, because we do not want to build inventory for the next year just before that, and this will improve our working capital and overall provisioning also. However, having said that, March we've done a slightly higher provision because that's based upon a 3-year average, so we continue to have that buffer within us.
Got it. My next question is, we are having a revenue guidance of 600 crore. What is the EBITDA guidance that we have given?
Should be around, I would say between 100 and 120.
Okay, got it. So my question was in relation to the changes that we have done in last 2-3 years, wherein we launched S-Chan 2.0, and there were a lot of operational improvement that we have brought in. We discussed about it in the previous call and the presentations as well. So are these numbers sustainable as we grow in terms of revenues and going back to the pre-COVID level? So are this operational improvement that we have brought in and the savings that we have brought in, are these going to be sustainable?
Yes, definitely they're going to be sustainable, because I think there's been a complete shift in the internal mindset, process of doing things. A lot of places we've reduced the number of locations that we are servicing from, and that has brought in efficiency. We're concentrating on 5-6 locations where we are servicing our customers from and building efficiency around that. So in terms of other expenses, yes, sustainable. Employee cost, not to that level, but of course then with revenue growth, we will try and see whatever best possible, because again, we have to keep in mind inflation and motivation of people. So that there may be a slightly higher than what we had anticipated, but with revenue growth and volume growth, I think that can be taken care of. So the rest of the plus working capital side, in terms of inventory and receivables, completely sustainable. We want to sustain these kind of working capital days going forward. That is a mindset that has set into the system, and fortunately everybody down the line is following that same thing.
Okay. My final question is slightly hypothetical. So assume that NCF, National Curriculum Framework, comes by December, latest by December, which is the end of the year, calendar year. What is the revenue guidance we'll have in that case for the entire year? Because we'll have a 3 months only remaining in the financial year.
So if that comes late, then the revenue guidance might not shift the goalpost too much. It might shift some bit. Difficult to say how much, but not much. But if it comes early, let's say by October or so, then the revenue guidance might shift more. So again, depending on the government's policy, so we are hopeful that should come a little early also. But if it comes late, then the implementation and the taking out books and the whole process will take 2-3 months, and that will not get implemented fully. Very partially, it will get implemented next year, next academic session. But NCF comes in, then it gives you a longer runway of, I would say, 3 years at least. And that will have a good growth over the next 3 years. And that is good for us. But even without the NCF, the growth and the volumes and the margins look decent, because there is a pent-up demand in the market. And as the paper scarcity is there in the market, that is helping larger organized players to take more market share this year. So that again is going to help us in achieving our numbers or even crossing that.
And assuming that it comes in October, then what will be the revenue guidance?
Again, very difficult to say as of now. This depends on how much syllabus changes it happens, what kind of content we have to create, and things that we cannot say right now, because the changes we don't know. But that will depend on the change impact it will have on the books. If the minor impact is there, then we can change it faster and bring the books faster. But if the change is a lot and we have to completely redo all the books, then it might take time. So those things we cannot say before we get the content, before we get the syllabus in hand.
Yeah, but having said that, I think fair to say if something comes in by October, I mean, I would say we can look at around incremental 10 to 15%.
Maybe, yes, that can happen. But again, it depends on the change that the NCF will require.
And the number of classes that they actually end up changing. They may be doing 3 classes or 5 classes or 8 classes in the first year. Yeah. So that depends.
Correct. So 15% incremental revenue, will it also be with the same EBITDA guidance of 20%, or will it be more than that? Since it is a delta?
It will be higher because, see, your fixed cost is already there. So again, whatever revenue adds, it all goes to, the gross margin goes to the bottom line. Yes, but initially there might be slightly higher specimens given to schools, but I think definitely most of it would go to the EBITDA. So your EBITDA would expand.
So my suggestion, this is NCF, we should not look at a first 1 year kind of trajectory. We should be looking at least a 3-year kind of a run. So when we plan for a syllabus change, it is going to have a short-term to medium-term impact for the industry.
Got it. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Ria from Equirus Investments. Please go ahead.
Hello. Thank you for taking my question. My
Ria, sorry to interrupt you. Your voice is not clear. Your voice is breaking.
Hello. Am I audible?
Yes.
Yeah.
Yeah. My first question would be in regards to other income. This quarter we had a significant bump up in other income. What does that constitute of?
So other income is basically the bump up is on account of the accounting for Smartivity Labs. Earlier it was accounted for an associate as up to March, but one of the directors who was holding equity has sold his stake. Not promoter director, one of the other employee directors. He has sold his stake in Smartivity. It discontinues to be an associate. So the accounting for that has changed, and whatever price that person has sold his stake, the fair value of our investment in Smartivity has been accounted for like that. So there is an 8.5 to 10 crore incremental margin on account of that.
So the explanation is given in the notes to the results.
Right. I just wanted a little more detail on it. Yeah. My second question would be, I've just recently started covering S-Chan, so I just wanted a breakup between what would be a revenue coming from a traditional sources and what would be from a digital sources, or if you could just give me in terms of percentage terms, that would also be great.
Yeah, so to be honest, we're not really breaking it up between traditional and digital because it's all got combined into a single hybrid and blended learning. Because pure play digital, at this point of time, I'm not sure how much it is working for any of us. Most of our products already are in the hybrid. Each of the printed books that go out do go out with a with a digital imprint, whether it's a QR code, whether it is a website support or something along with that. So each of the books have already been enabled to be digitally enabled. So we're not really segregating that at this point of time.
So we might be able to charge either a higher price point, or that might be a benefit which might accrue to a user by using S-Chan books. But it will not be possible to do a clear bifurcation between what the digital is bringing and what traditionally is coming from the book itself.
Right. Okay. And where do we source the paper from exactly? Like, who would be our vendors, or is it imported, or how is it? What is the arrangement?
So we import, I would say 30-35% paper from Indonesia, a mill called April Fine. Then you take paper from Indian mills like TNPL, we take it from Neni, we take it from West Coast, we take it from Shah, we take it from Quantum, we take it from around 10 to 12 mills we take paper from in India as well. So around 60-65% paper we secure domestically.
Right. And I think 85% of it is already covered for the current year's demand.
So we have secured around 80-85% paper we have secured. Rest 15-20% paper we will secure soon.
Right. My next question would be for NEP. So basically the new policy which is coming up. So at in the political stage, where is it right currently? Like, it has been passed by Rajya Sabha, and what is the bottleneck here?
NEP is already passed by the government. NEP is already getting implemented. It is NCF which needs to now get approved by the government.
Okay, and that is at what stage?
As I said earlier, the stage is we are not very sure which stage the government is working. But yes, according to our sources, the government is ramping up its pace, and hopefully it should be out before the end of this calendar year.
Okay. And if it comes in the next year, you would see revenue coming in FY24?
Yes, FY24, correct.
So that would be the latest, right?
Yes, that should be, I would say, the last thing. It should come before that, hopefully, but maximum it should come out by FY24, maximum on the higher side.
Should come out before
should definitely come before
the elections.
Definitely.
Has to come out before the elections.
Right. And I would want to ask, what would be a realization currently hovering around? Like, I just read in the presentation that we have seen a 15% hike. So do we see similar kind of hikes coming around in the next quarters? And is it just pass on of the incremental paper cost, or are we seeing any margin improvement here also?
Yes, so 15% paper. So we do pricing of our products once in a year, because again, our catalog goes out to schools once in a year. So we don't do incremental price increases around the year, except for maybe the test prep segment. So you'll start seeing the realization coming in from Q3 onwards, because the price realization changes from September onwards, and since the session starts only from November, December.
And price hike is not the only lever that we have for either increasing or defending our margins. We have also reduced discounts in the channel, so that also adds to our margin profile. So there will be some other internal efficiencies which we are planning to bring in this year. So I mean, all of these together will help us in our margins.
All right. And what would be at the full capacity of our current plant, what kind of revenue can we generate?
Sorry?
There is no capacity constraint as far as we are concerned, but again, we have to be very prudent with whom we are selling. We have, in fact, over the last 3 years, reduced the number of channel partners by almost 30%, which reflects well in our working capital. We do not want to be very aggressive with revenues, because again, we do not want to compromise on the quality of our sales, and because that impacts both the realization, impacts cash flows, and overall even servicing of the schools. Plus, anything extra that goes will come back as inventory, so it's pointless. So while there is no capacity constraint, we will continue to run it prudently and ensuring that cash flows come in. We do a good margin business. That's what we are focusing on, keeping it simple.
Okay. I got it. And what would be the sustainable level of tax percentage or accumulated
I'm sorry,
losses?
we are not able to hear you.
What are the accumulated losses we have currently for tax computation?
It should be around 130 odd crores.
130 crores. Okay. Thank you.
Thank you. Next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Thanks for the opportunity. So I wanted to understand, like when we studied, there was a famous book by the name of Wren and Martin, which belonged to your
Yes. Yes.
and it was very famous. So I studied from an ICSE board. So I just wanted to understand that from a traction point of view, or there are certain books which are very much what we can say sticky to the student, and across the board, for example, in ICSE board, everyone used to use those books. So one of them was Wren and Martin. So going forward, for example, are we having such sort of books in categories of NEET, JEE mains, wherein the student would actually want to purchase those books? So if you can explain regarding that, any for that matter, chartered accountancy, engineering, which are those categories which we are having?
Okay, so basically school category gets divided again into basically three categories. One is ICSE, CBSE, and then the state boards. And ICSE compared to CBSE is only 10% of the market. And CBSE, we are leaders in a lot of products like Lakshmi Singh in science. We are leaders in maths. We are leaders in Hindi. We are leaders in Sanskrit. We are leaders in French. We are leaders in physical and health education. Plus, if you talk about ICSE, Wren and Martin is used both in ICSE and CBSE space. We are again leaders in maths there and ICSE. Plus, we are leaders in higher education space in test prep. We have series by the author named R.S. Agarwal, which is a very famous author. And again, we are leaders in accounts, Shukla and Grewal in CA. We are leaders in engineering space. We have Thareja, Kurmi, B.K. Mehta, a lot of good books there. We have some good books in management as well. So these are the lot of spaces that we are leading in through our authors and through our books and through our brands. And these are some of the categories which I mentioned. There are many more. The list is quite long. I can't spell it out right now. Yeah. But yes, definitely S-Chan as a group is leading in a lot of spaces. We are also leading in Bengal as a state board, Chaya, which is a very popular brand. Like Navneet is in Maharashtra and Gujarat, Chaya is in West Bengal. And is one of the most popular books there. And it's the biggest brand and the biggest publisher in that part of the country. And we are leading there as well. So these are some of the categories I just mentioned.
Okay. Now, till the time we were in school, we used to use a lot of your books. But when we came to, I joined started accountancy course and all these things. So I joined classes and all those things, and institute curriculum is also there. Similarly for engineering and all. So I don't think there would be much penetration, or what is your view regarding the penetration of these books in the professional courses which we are offering?
The professional courses, the books that we are normally selling are course textbooks. So when you are preparing for the examinations, we have books which are popular, but there are other books also, other companies also which are popular in that category. And when you join the CA Institute or an engineering college, you use some of our books. I will not say all the books, because it depends on the category of engineering institute that you join. If you join an IIT, it's a different category. If you join a regional institute, it's different. If you join a local private college, it's a different books they use. So it depends again where you are studying. And children are using the books, and definitely they're using it. But some of the children are photocopying also. Some of the children are also getting some notes from some institutes and all, which is not a part of any publishing business, as a matter of fact, not ours, not others also. and that is happening. And some people are also doing online. They are getting e-books of our books or some other books. They're getting online for free, which is again, it's like an online piracy, which is legally not allowed, but people are still using that in India, and we try to stop that as much as possible. So all these things are definitely being used, and people are using it. And going forward, we feel that we had launched some books for higher education for students last 1.5 years back, and we are seeing good traction in the market, which are called low-price student edition, and which are priced much lower than a normal book. So a normal book was priced at, let's say, engineering book of 800 rupees. We are pricing the student edition at 500 rupees. And that the student buys it for one semester and uses it. So basically the idea is read and throw kind of idea. So you don't need to keep that book for long. Maybe you use it for only one semester. But that book, because it's cheaper, then it reduces the chance of photocopying and online piracy in the market.
Okay, got it. And sir, your
I'm
view
sorry
on
to
the...
interrupt you. Can I request you to come back in the question queue?
Yeah, sure.
Thank you. Participants are requested to ask 2 questions per participant. If time permit, please come back in the question queue for a follow-up question. Next question is from the line of Shubham Ajmera from Swike Ventures LLP. Please go ahead.
Hello. Hi, sir. Thanks for providing me the opportunity. So I joined a bit late, so sorry, things are already discussed. So I had a question on salesmen in test books. So I just wanted to know, like, have we took the full exit from the test book, like sale of equity as well as preferential? And also, are we planning to exit from other investments as well in near future, like Smart Equity, Gyan Coach, and others?
Yeah, so we've taken a complete exit from test book, 100%. As far as Smart Equity is concerned, yes, as and when we feel there is an opportunity and it's the right valuation, with the kind of way they are growing, I'm sure it will only multiply, and probably since our investment is a very, very early stage investment in Smart Equity, I think that will be much larger than what we had in our test book. With regard to the others, I think the other 2 smaller investments of 2.5 and 1.5 or something, that we've already written off in our books because those things have gone to zero. So some of them will of course not make money in the longer run. So that we've already provided for and written off in our books. Smart Equity, yes, it will definitely at some point of time give us an excellent exit, much larger than what we got in test book.
Okay. So any idea of broad valuation, say, if you had done for the Smart Equity, like current valuation of the investment?
So the last round happened at about 100 crores last year in June. And then, of course, the revenues have only multiplied 2-3 times since then. So, I mean, I don't know whether they're going in for a fundraise because they finally, they're also cash flow positive from first quarter and very well when they've had a huge first quarter this year. So they are doing exceedingly well. Till the time they actually need capital, they will not tap the market. So my sense is they're going well, and they should definitely probably do 50 odd crores plus revenues probably this year or by mid next year. So that has been going good, and a great set of people in that. So I think long term, it'll take, my sense is it'll take about 1.5 or 2 years to get something from there.
They also bought some marquee investors on board in their last round. I think Mr. Ashish Kacholia and Mr. Anendra Kotari also joined their case.
Okay. Understood, sir. And my second question is on NCF implementation. Like we have discussed multiple times that post the NCF, our revenue will grow. And but I had a question on that. But since the new course was introduced and the syllabus would changes, so then we need to hire more authors as well as our employee cost will also increase substantially. So our bottom means I just wanted to know, like since we are planning for after NCF implementation, we are guiding for 20 to 25% revenue growth. So this revenue growth will also in the bottom line as well, in bottom line as well, also we are trying to achieve the 20-25% growth, or in the initial year because of this author's cost and all, our bottom line may not increase substantially, but post some medium term range will make good money in the bottom line as well.
So we believe the bottom line will definitely increase with the increase in sales, and the content creation cost will not be much, including the authors and all we already have on board, including the editorial team we already have on board. Maybe some part we need to spend to create the new content, but it will not be very substantial. So it will be a small part of it. Yes, the only major cost that will come in is obviously to produce the new books and to sample the new books. So more than the content creation cost, the cost will be there on the sampling and the marketing part of the business. So which I feel will be covered through the sales of the books. So I don't feel that should be a major concern in regarding the profitability.
Okay.
Also, one thing around numbers, we are a turnaround company to that extent that you will see a much higher percentage jump in profitability versus last year or versus the last 2-3 years. So if even for example, last year we did a top line of 480 crores, and I think our PAT was around 6-7 crores. Now, obviously, this year we are saying we will do 600 plus. That is a 25% hike, okay? But your profit growth will not be 25%. I mean, it will be multiples of that number because operating leverage kicks in. Okay?
Right.
So that way, I don't want to give a profit guidance here, but I am saying that percentage on the top line will not translate directly into bottom line. It will be many times more than that because of the fact that we are in a turnaround phase of our life cycle as of now. That percentage directly percolating down you can do when it's a steady state business. Not for us.
Understood. And last question, if I can pitch in for the last one question as well. So just wanted to know, can you give us the revenue mix from the CBSE or ICSE and this state boards as well, if you have any idea on those?
Yeah, so CBSE sales would be the majority of the sales for the group, and CBSE would be doing around, I would say, close to 60-65% should be coming from from CBSE, and then I would say 15-20% coming from ICSE and 15-20% coming from state boards.
This is of the school business.
This is for only the school business I'm talking
about. For the K-12 business.
K-12.
About 15% of the total revenue is also higher education.
Yeah, that is separate. But I'm talking about only the school business bifurcation. Yeah.
Okay, got it. Thank you so much.
Thank you.
Thank you. A request to all the participants, please restrict to 2 questions per participant. The next question is from the line of Saurabh Kumar from Scientific Investing. Please go ahead.
Hello, sir. Congratulations on good numbers, and there is a tremendous improvement we can see on the balance sheet side and the working capital improvement.
Saurabh, sorry to interrupt you. Can I request you to speak a little clearly, a little louder, please?
Sure. So, sir, congratulations for the good result, and we can see a lot of improvement in the working capital and on the balance sheet. My question is, where do you see the optimum working capital? That is one. And given this is structural, we hope there will be more cash which is going to be generated. So what is your plan in terms of capex? I'm not asking for next year, but let's say if this is a structural story, on an average, how much percentage of the cash flows will go in capex, and then what is going to happen with the post capex cash which is there? Will you have a dividend policy and all? I'm sorry if this has been addressed because I joined a bit late.
Yeah, no, I think we haven't taken that up earlier. Thank you for the question. I would say a maximum of 10 to 15% would go in capex, not a very large amount, because we are not building any further capacity, especially on the print side, because there's enough capacity available in terms of printing outside. And again, content development is not such a big high cost. We should have good cash flows by the end of this year, and definitely on the dividend side,
board will take a call.
The board will take a call, but if numbers are decent, as we plan this year, then I'm sure next year would be a year that we would definitely want to.
We would like to return back to shareholders. We will see in which form it's done, and that's something which the board will decide at the opportune time.
I think we have a dividend policy which is there. I think once the full year EPS is decent enough, then of course we'll.
But as per your question, there's not a major, I would say, capital requirement in the near term.
Sure, sir.
Not
And
really.
in terms of our working capital, have we reached to the optimum level, or you see there is further scope of improving it?
Yeah, there's definitely further scope of improving it, especially on the inventory side, and we'll continue to work on that. I think getting, especially supply is going to be a challenge for other people in the industry, and we'll take advantage of that and squeeze as much as possible out of the market. So I think we are 80% there, another 20-25% we can further push.
Sure. And sir, one last question. Do we have any kind of revenue concentration, like in terms of by geography or by client? I mean, I just want to know, are we concentrated anywhere in terms of revenue on?
No, not at all. Not at all.
We're not concentrated, but yes, definitely North India is the largest market because North India has a largest chunk of schools and largest chunk of population. So yes, North India, if you take the total North India population into account, yes, definitely North India is largest, but it is not like concentrated size. Yes. It is depending on the population and depending on the schools you have in particular region.
Yeah,
so
but
definitely North India would be largest.
Yeah, but having said that, I think the question you're coming from in terms of risk, I don't think so any customer account or any school accounts for more than 0.5% of my revenue. So I mean that risk is not there in terms of customer losses.
Great. Thanks a lot, sir.
There's no big customer as such. I mean I don't think so there's a customer exceeding any school exceeding even 1 crore.
Yeah, I don't think so. Maybe 1 or 2 chains of schools, but nothing major.
Yeah. So it's pretty evenly spread across. Yes.
Thank you. The next question is from the line of Chintan Seth from Samiksha Capital. Please go ahead.
Thank you for the opportunity. Am I audible?
Chintan, you're not audible.
Now am I? Hello?
Yes, go ahead.
Yeah. So, congrats for the great set of numbers. I just wanted to check on the pricing. You said 15% is driven by the paper prices broadly. But haven't we seen, historically, does that prices get reversed when paper prices tends to normalize? I don't think I have seen books prices revising lower once things normalize.
Not to my knowledge, the books prices have not gone down. The books prices have only increased. So basically, this year is abnormal increase of 15, maybe 16% of increase in book prices. But next year, if the market continues and the paper prices get normalized, then the price increase will be like 8-9%.
Right. So we'll retain
7-8% depending on the product to product category. But yeah, it will be like half of what it will be this year.
Right, and if the paper prices are favorable, then whatever we are losing this year, 100-200 bps which you are guided, kind of will get well compensated with higher volumes if assuming the NCF chips in perfectly or not. Okay, so that's on.
Growth this year also. Plus, we are also expecting that the change in the market scenario, which is getting the quality customers that we're dealing with and cleaning up the market space, that will definitely have a long-term impact on the business in a positive way. And that should help us in getting better margins in the future, improving our cash flows, improving our EBITDA margins. Everything, it will have a positive impact. It is just this year, it has been very abnormal for the paper market to jump up suddenly 60-70%.
Correct.
This is not a normal phenomena. So this is a normal phenomena.
But in that context, do we have we faced historically that when things reverse, the competition kind of push down prices and we kind of that hasn't happened, right?
I haven't seen any publisher bring down the prices till now. They might not increase or they might slightly increase. That is a possibility, but I haven't seen publishers bringing down prices ever.
But discounts might increase, which might incentivize dealer or channel partner to move from publisher to publisher.
not only about the margin to the dealers. The dealer definitely wants his margin, but obviously for the brand also and the product which is selling in the market.
Correct.
If he gets a higher discount and takes up the keeps the product, a product which doesn't sell is no use to him. So he also wants to rotate his inventory very fast, and he also wants to, sell those things which are selling in the market.
Correct. And secondly, on the capital allocation, and I will join back in queue. On what is the corpus, annual corpus you would like to keep aside for this EdTech investments? That as an investor we should expect that this is kind of the buffer you will keep for any opportunity. If not, then it will stay in cash. But that one can expect that the investment will go out of the cash will go out of cash flows from the company.
Yeah, at max 10 to 15 crores. That's also a huge risk thing. We just done one in the last 3 years. We have to find the right. It may not only happen during any year, but at max 10 to 15 crores. But that's also a stretch. We don't want to. We'll always do the first series. We'll never do a follow-on series. We'll never do valuations in excess of 50 crores. So we've got all that inside, and we'll not invest beyond a certain point.
Sure. That's all from mine. Thank you, and all the very best.
Thank you.
Thank you very much. I now hand the conference over to the management for closing comments.
Thank you, and thanks everyone, and for your questions, and thanks so much for the good wishes, and hope we continue on this growth path and the path to profitability and margins. And as we said earlier, we are hoping to be a debt-free company by the financial year end, and we continue to give good quality products and services to our customer, and will continue to do so. We have been doing for more than 8 decades, and will now continue to do so as well. And we wish you happy Raksha Bandhan and a happy Independence Day in advance. Thank you so much.
Thank you very much. On behalf of Prabhudas Lilladher Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.